In this video, we're going to talk about 3 stocks you may want to consider buying during the market sell-off. The stock market enjoyed a strong run from the middle of June until the middle of August 2022, and it appeared as though a bull market was just getting started during this time. However, none of the 3 major US market indices have yet reached their bottoms for the year, and they are all still firmly in negative territory. In the midst of these challenging times for investors, the prices of many high-quality stocks have fallen by a significant amount since the beginning of the year. As a result, these stocks are now attractive purchases for anyone who is willing to hold onto them for a while. Number 1. Etsy, stock ticker, ETSY. Etsy is an e-commerce specialist that found a way to be highly successful by focusing on a small niche of this vast industry. The company's platform offers primarily vintage or handmade goods that are difficult and sometimes impossible to find elsewhere. Developing a solid brand is important for any corporation, and that's what Etsy has done. Both buyers and sellers of rare vintage items know where to turn to have the highest chance of finding what they want. That provides Etsy with a solid network effect. In other words, the value of its platform increases as both buyers and sellers continue to join. Etsy's revenue growth has slowed substantially lately. That's partly due to difficult year-over-year comparisons because business was booming with the pandemic-induced increase in e-commerce sales. Whatever the reason, investors have punished Etsy's stock this year, but that only makes it more attractive to those focused on the long game. Etsy has barely scratched the surface of its potential. The company sees a $2 trillion total addressable market ahead, and it now holds only a minuscule 2.6% share of that total. Etsy isn't the only player in this space, but it is one of the most important. And considering the name it has already built, investors can expect the company to remain relevant for a long time to come. After losing nearly half of its value in the stock market over the past 12 months, Etsy looks like a solid buy. Number 2. Airbnb, stock ticker, Abnb. Even though Airbnb's business is showing signs of improvement, the company's stock continues to struggle. The home rental platform is posting results that are higher than they were before the pandemic outbreak, which caused a slowdown during the pandemic because everyone was confined to their homes, and traveling was nearly impossible. The number of nights and experiences booked by the company totaled 103.7 million during the second quarter, which is a 25% increase compared to the same quarter in the prior year. To $2.1 billion in revenue, the company reported a year-over-year increase in sales of 58% and a sequential increase of 73% compared to the previous quarter. The net income of $379 million for Airbnb was the company's highest ever. In each of the preceding 3 years, during the second quarter of business, the company has racked up net losses. Long-term stays are an important contributor to overall growth. According to the latest reports from the company, stays of 28 days or longer continue to be its most rapidly expanding sector. This is significant because the pandemic brought about a change, in which people began working away from the office a greater proportion of the time. Traditional hotels aren't always the best option for people who are working on the road, and Airbnb can often be a better alternative. The accommodations provided by the company have the atmosphere of an actual home, in addition to conveniences that are typically difficult to find while traveling. The platform that Airbnb uses also enjoys benefits from the network effect. The increasing number of users at the company brings in a greater number of renters to the platform, and vice versa. Airbnb is well positioned to benefit from the continued expansion of the hospitality industry in the long run due to the fact that its business model and competitive advantage set it apart from its competitors. Number 3. Fiverr, stock ticker, FVRR. Another stock that increased in value during the pandemic is Fiverr. The tech company's results are not nearly as strong as they could have been had the gig economy received a boost in the early days of the outbreak. However, this tailwind has substantially weakened in recent days. The company's revenue for the second quarter increased by 13% year-over-year to $85 million, which compared to its recent performance, was not particularly impressive. Fiverr is still not profitable, reporting a net loss of $41.9 million during the quarter. This is a significant increase from the prior year quarter when the company reported a net loss of $13.3 million. Due in part to the global economic headwinds such as inflation that we are currently confronted with, businesses are decreasing the amount of money they spend on independent contractors. Despite this, there are many compelling reasons to maintain a positive outlook. The platform provided by Fiverr is an additional illustration of the network effect because the addition of more freelancers and businesses makes the website even more appealing to other users. As of the end of June, The number of the company's active buyers had increased by 6% year over year to 4.2 million, while the average amount spent annually by each buyer increased by 14.6% year over year to $259. Fiverr has plenty of room to increase its revenue and eventually become profitable, thanks to the vast opportunities presented by the gig economy. The company estimates that the total addressable market in the United States is $247 billion. Fiverr has not even begun to scratch the surface of the opportunities it presents, and this is a very encouraging sign for the company's future. Which of these 3 stocks do you think are good buys during the market sell-off? Let us know in the comments below. And don't forget to like this video and subscribe to our channel for new weekly investing stock tips and strategies for building wealth. Thank you for watching.